You probably heard from many people online that we're in an AI bubble and the NASDAQ is about to drop over 50%. And although I believe that it's bound to happen, I just don't think it's going to happen anytime soon. I'm talking in years. History doesn't repeat itself, but it sometimes rhymes. People are saying that the similarities from what's happening right now to what happened during the dot-com bubble. So let's take it back before the dot-com bubble even started to form. The year is 1991 and the internet has just become a new phenomenon where everybody with a computer had access to it. The Federal Reserve dropped interest rates from 9% down to 3% within just a few years, so it made borrowing money that much easier to do, making people more eager to invest. From 1991 to 94, the foundation was placed. Rates were low, the internet infrastructure started to come in, AOL and Netscape showed what was possible with the internet, becoming mainstream in 94, then 95 through 2000, boom, the number of IPOs skyrocketed. Everybody was talking about this hot new thing called the internet and how revolutionary it will be in the future. Businesses that became publicly traded included .com in the name so that investors like you and I come pouring in with loads of cash to invest in it. The investors and the businesses were becoming filthy rich. These businesses didn't even have to be profitable. Most of them had no solid revenue coming in with no clear pathway to become profitable. But they were still raising hundreds of millions of dollars, and the early investors started to see massive returns in a short period of time, simply because they had .com in their business model. Just look at the number of IPOs and look at the average first-day return. From 95 to the year 2000, every year it averaged anywhere between 14% to 20% on the first day of going public. But look at 99 and the year 2000. You wouldn't believe this. In 99, there were 446 IPOs for an average of 70% profit on its first day. Then 333 IPOs with an average of 57% on its first day in the year 2000. That is remarkable. So that is what created the bubble. And that is called peak euphoria. When everybody is bullish. When a guy that works for minimum wage is telling you what to invest in. But take a look at this. As all of that was happening in 99 and 2000, while nobody was paying attention and everybody was making a lot of money with investments, the Federal Reserve was increasing interest rates again, slowly but surely. 0.25% here, another 0.25% there, and this lasted until May of 2000, increasing interest rates from 4.75% to 6.5%. And as all that was happening, these new businesses were becoming squeezed. Remember that most of them didn't even have a clear path to becoming profitable. So increasing interest rates turned off the money printer for them as well as for investors. The NASDAQ ended up peaking in March of 2000, then crashed 80% within just 2 years. The unprofitable businesses became obsolete. Retail investors like you and I lost loads of money. And get this, it took 15 years to recover. It wasn't until 2015 when NASDAQ hit a new all-time high from the high of 2000. Wild. But I get why some people believe that we're in a bubble right now. Well, because it sounds cool to say, and since the market's been hitting a new all-time high almost every week. But here are the facts. Interest rates are still elevated, but that is subject to change in the coming year or two because the Federal Reserve has just started cutting interest rates a few weeks ago, and they still have a long way to go. Which, by the way, they're expecting to cut interest rates again by the end of the month. Let's take a quick look at the CME Fed tool. At the October 29th meeting, there's a 100% chance that they'll be cutting interest rates. And if you look at the December meeting, there's an 87% chance of another rate cut. And it's all because of how poorly the labor market is doing. Matter of fact, we had some more data come out recently that US private companies lost 32,000 jobs in September, which was well below expectations of a 52,000 gain. Not only that, but August private payroll number was revised down from plus 54,000 to negative 3,000. The labor market is suffering, which is exactly why they're cutting interest rates. Also keep in mind that the president wants to see interest rates below 2% again. He doesn't have any control over that, but he does have control on who becomes the next chairman of the Federal Reserve, which is coming up in the next 8 to 9 months. But once we have lower interest rates, that will create the foundation for a bubble to form, just like the early 1990s. Similarly, we've also heard big businesses starting to incorporate AI into their business models, with Nvidia leading the way, as well as Apple coming out with Apple Intelligence last year, Microsoft teaming up with OpenAI, Google starting their own software, Tesla with Robotaxi, and the list goes on. However, all of these businesses are printing money. They're all making billions in free cash flow every year. And we have yet to see the big IPO rush like how we saw back in 1995 to 2000. But I can see it coming within the next few years because again, lower interest rates makes it easier for everybody to borrow money, especially businesses. So we are far from an actual AI bubble. We may get a small correction, which is healthy for the stock market, but I'll be using that as a buying opportunity. Because once the Fed is finished cutting interest rates, which may take a year or two to completely unfold, more IPOs will be listed, most of them will likely incorporate AI into their business models, and everybody will be investing into them. We'll likely see NASDAQ go up 100% within a year or two. All of your colleagues will suddenly become experts, and that will be the bubble. It took nearly 10 years for everything to fall into place back in 1990, but this AI bubble will be much faster. Mainly because of the help of, well, AI, coincidentally. It'll make creating businesses much easier to do. Interest rates will be lower, thus creating the IPO boom. But of course, I'll be keeping you posted as everything comes into play. But if you gain any value from this video, give it a thumbs up and subscribe.